Hey, crypto enthusiasts, welcome back to the channel. In today's video, we're diving deep into why this crypto cycle feels so different from all the others. From massive institutional involvement to the rise of decentralized finance and meme coins, there's something in the air this time around. So stick around and let's break down exactly why this crypto cycle is turning heads. Before we dive into the specifics of this cycle, let's take a quick walk down memory lane. The crypto space has seen a few major cycles. Back in 2013, Bitcoin went on its first massive run, but that ended in a crash. Then came 2017, the ICO boom, and the infamous bull run of Bitcoin hitting $20,000, only for a brutal bear market to follow in 2018. We've all been there. And then, 2020 to 2021, we saw a huge rebound driven by institutional players, and Bitcoin reached a new all-time high of over $60,000. But even with all this history, this current cycle, well, it just feels different. Now, for those of you who followed the market closely, you've probably heard about the 4-year cycle theory. This theory suggests that Bitcoin and crypto, in general, experience a 4-year cycle, driven by the halving events that occur every 4 years. Historically, after each halving, we've seen a massive bull run, followed by a bear market, with the pattern repeating. But here's the kicker, this cycle could be breaking down right before our eyes. If we look at the price action and the overall market behavior, we are not seeing the typical cycle play out in the same way. The institutional money pouring in, the rise of DeFi, and the mainstream adoption of NFTs are all factors that could be fundamentally altering the traditional 4-year rhythm. What if we're witnessing the evolution of a more stable, less volatile market? With global adoption on the rise and crypto being integrated into more industries, we may have moved beyond the old boom-bust pattern. Maybe the 4-year cycle as we know it is coming to an end. First, let's talk about the big players, the institutions. In previous cycles, Bitcoin and crypto were mostly driven by retail investors. But in this cycle, we've seen companies like Tesla, MicroStrategy, and even JP Morgan becoming involved in the space. Companies are putting Bitcoin on their balance sheets, and hedge funds are diving into crypto as a mainstream asset class. This is a major shift. Traditionally, crypto was seen as this rebellious retail-only thing. But now, Bitcoin and other assets are being recognized as legitimate by some of the biggest financial players in the world. This new wave of institutional money isn't just a passing trend. It's fundamentally changing the way the market operates, creating more stability and long-term belief in the space. Next up, let's talk about decentralized finance, or DeFi. In previous cycles, we were mostly focused on Bitcoin and Ethereum, with other coins coming and going. But now, DeFi is everywhere, and is disrupting traditional finance in ways we never thought possible. We're seeing decentralized exchanges like Uniswap, Compound, and Aave enable people to lend, borrow, and trade without intermediaries. This whole ecosystem is rapidly expanding, and it feels like we're at the dawn of a new financial system. More people are experimenting with yield farming, liquidity mining, and staking than ever before. And unlike previous cycles, the real-world utility of crypto projects is undeniable. People aren't just buying crypto for speculation, they're actively using it to earn income, provide liquidity, and take part in a revolution that could change how finance works forever. Another major shift in this cycle, NFTs. Non-fungible tokens went from being a niche concept to an explosive trend that changed how we think about ownership and value. From digital art to virtual real estate, NFTs are bringing in new audiences to the crypto space. Celebrities, athletes, and even brands are jumping on the bandwagon. And let's not forget the insane sales. We saw Beeple's digital artwork sell for $69 million. But it's not just about art. NFTs are revolutionizing the way we think about collectibles, gaming, and even real estate. Games like Decentraland and Axie Infinity are allowing people to own virtual land and assets, making NFTs a bridge between digital and physical worlds. And who could forget about meme coins? From Dogecoin to Shiba Inu, we are seeing a trend that is so uniquely tied to internet culture and social media. Meme coins have become their own phenomenon, with Twitter influencers, TikTokers, and even Elon Musk playing a huge role in driving these projects to massive valuations. What's interesting is that while some view meme coins as a joke, the sheer power of community-driven projects is something new to this cycle. There's a sense of collective energy and decentralized organizing that makes these coins feel more like a cultural movement than just speculative assets. And let's face it, when was the last time mainstream media was this obsessed with crypto? Here's another reason this cycle feels different: the lack of capital rotation into altcoins. In previous cycles, we often saw Bitcoin lead the charge, but as it began to reach new highs, retail and institutional investors would rotate into altcoins, driving up the value of Ethereum, Binance Coin, and others. It created a sort of altcoin season, where investors looked for the next big opportunity outside of Bitcoin. This time around, however, Bitcoin has largely maintained its dominance, and we haven't seen the same level of altcoin rotation. There's been significant interest in Ethereum, yes, but many altcoins have struggled to catch up in terms of market growth. Why? Some argue that the market is more focused on Bitcoin as a store of value and institutional asset. And perhaps the DeFi and NFT sectors have kept investors' attention in other ways. Without the usual cycle of capital flowing from Bitcoin into altcoins, the market feels different. More concentrated and less speculative in some areas. Finally, we need to talk about regulation. The reality is, the crypto market is becoming too big for governments to ignore. In this cycle, we're seeing countries like El Salvador make Bitcoin legal tender, while other nations like China are cracking down on crypto mining and exchanges. And while the regulatory environment can be confusing, it's becoming clear that governments around the world are scrambling to figure out how to manage and integrate crypto into the global financial system. But this doesn't just feel like a negative. The increased regulation could bring more stability and legitimacy to the space, which could make even more institutional investors and big players more comfortable diving in. We're moving from the Wild West phase to a more structured landscape, and that's why this cycle feels like it's more than just another speculative bubble. So, there you have it. From institutional money and DeFi to NFTs, meme coins, and global regulation, this cycle is anything but ordinary. The level of mainstream adoption, the diversity of projects, and the involvement of major players make it feel like we're on the cusp of something much bigger than just another crypto boom. But could this also signal the end of the traditional 4-year cycle? And could the lack of capital rotation into altcoins be a sign that the market is maturing? If institutional involvement and global adoption keep growing at this rate, we might never see another typical crypto crash again. What do you think? Are we witnessing the beginning of a new financial era, or is this just another flash in the pan moment for crypto? Let me know your thoughts in the comments below, and don't forget to like and subscribe for more in-depth analysis of the crypto world. Until next time, stay safe and stay bullish.